The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 11th fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we do everything we can to have an extraordinary weekend, extraordinary afternoon, morning, wherever it is that you're coming from. The easiest way for you and I to do that, well, it's very simple. I know you're waiting for me to tell you what that is. You know what it is. It's that little 2x4 shift out there. It means that you and I, all that we need to be able to do is find the gift in every set of circumstance that life is going to throw at us. And that's really the role of the universe, the role of life out there. Today, we're going to go take a look at the circumstances of the bulls and the bears out here, what the buyers and sellers are doing. Right now, the Dow is up 43 points. The S&P is up 1. I'm absolutely grateful for your presence here today, and I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, 727-445-1044. Love to hear from you, especially on this fantastic Friday. Of course, this is TFNN. I'm Steve Rhodes. Welcome to the show. Right now, as I say, the Dow's up 42. S&P is flat, up 92 pennies. NASDAQ Composite up 6 points. Russell is up 1, about $1.50 out there. The DAX closed off 86 points. Down at 110.123 is where it closed at. The FTSE closed down 38 points at 61.17. Goldilocks back $6 right now at 11.03. Silver down 20 cents at 14.44. Light sweet crude up 57 cents at 45.35. Moving to the upside right now today, you've got Mettler Toledo International up 3%. That's up $9. You've got Miratai Therapeutics, one of those up 20%. That's up $6 and change. Illumina, haven't seen that stock for a while, up $3, up 3%, up $6. Restoration Hardware up with big volume today, up 6%, $6. Shake Shack's up $5.50. Puma Biotech up $6. Amazon up 5. Mattress Firm taking it to the mattresses, down 20% with big volume. That's down 13 buckaroonies. Cherokee Inc. down $8. That's off 34%. Arista Networks off $7. Zumiez down $6. Energy Focus off 6. All right, so where do we begin? Let's begin first. Let's begin here. Take a look at what's going on with regard to the price oscillator summation index for all three. Well, not all three, but three of the indices that we follow with this tool, at least here on the radio show. That's the New York Stock Exchange. That's on the left-hand panel. We can see that the price oscillator is above zero. When I say above zero, give you a reading on it. Oh, I would. There we go. The reading about 26.83. What does that mean? What it should mean to you is that the buyers are actually, even though we haven't seen much in the way of price movement, right at the stage here, buyers are the ones that are in control of the New York Stock Exchange. Exact same message here inside of the NASDAQ Composite. Now, we haven't seen a ton of price movement. That's kind of unusual, right? Normally, we have 200, 300, 400-point swings between overnight sessions and maybe by the time we'll get on board here. But this stage here, we have three of the indices that we follow. New York Stock Exchange, wide swath of the market. NASDAQ Composite, wide swath of the market. And the Dow, narrow swath of the market, but yet an all-important indice to follow. All three of these suggest that it is the bulls that are in control of the market on Fantastic Friday. If we take a look at the VIX index, that's trading down just a tad. It's trading at 24, pretty much even, Steven, as we take a look at it right now, 24.39, pretty much where it closed yesterday. I have a set of tools that suggest that the VIX index is going to get down at least to $20.28, maybe even below that 50-day exponential moving average. If my assessment is correct, and the VIX index goes down, what that's going to do, at least the S&P 500, is the S&P 500 will move higher. To what degree, that I can't tell you, but it will move higher from where it is that we're at right now. Therefore, my assessment, as I've been sharing with you over the week, was that the market had made a potentially a high that we wouldn't see until, well, for quite some time to come. I am taking that assessment back because of additional work that I had done. So my subscribers and I, we were short the market. We went short a few days ago, and we closed out those trades today at break even. They're right around break even, slight profit, slight little loss. I mean, just a few pennies is all that we're talking about here. So I believe the VIX index is going to move down to $20.28 or lower out here, and I think it'll do it during the coming week out here. So that's what as I take a look at it between the price oscillator, summation index, and this, and then several other tools. I'm not going to share all those with you here. If you're a newsletter subscriber, you know what they are. You've got access to it. You see that out there. Our little roadmap for the way the markets, what they're doing, and what we follow out here, all suggest. And I don't, being disingenuous is horrible. I'm not, and so, and that doesn't mean that the market's going to do what Stevie believes it's going to do, but whereas I had been. Now, I do believe, let me really clarify, I do believe that the market's going to be going lower than where we've been, and that there's going to be a bottom-ish pattern that will form in 2016, February to April timeframe. But that doesn't mean that it's going to do it right this second out here. So that we clarify, and then we're all set there. So that's when we take a look at it. If we go take a look at. And the thing is that it's not so clear when we just take a look at, for example, patterns. Let's say if we go take a look at the ETFs out here. Let's just go see what's going on there. We'll just cover that. If we take a look at the Qs, right now they're trading out at 105.12. Now, if the Qs close above 104.80, light volume today, 17 million shares. If the Qs close above, and the clues, right? If the Qs close above 104.85, what that says, light volume or not, the Qs ought to get up and try to test the high, which inside of it, and the high that I'm referring to is the August 28th swing point. And that price point is 106. Any move above that, you're looking at 106.92, 108.79. As the at least as the initial target area for a continued bounce. If that's in fact what the Qs are doing, I don't want to be on the short side of the market. I don't necessarily want to be on the long side here just yet, but I don't want to be on the short side of the market, at least with regard to take a look at the indices. If we take a look at the IWM, trading into its swing point, which was August 31st, volume there, 29 million shares. Today, you're doing 15 million shares, so volume's not too bad. Volume yesterday was 29 million shares going into 29 million shares, and we said even if it rejected that level, which it did, even if it rejected on price, meaning closing below 114.76, that its message was that price would be back up there to test that level. That level, again, at least being the bottom of the swing point from August 31st. Well, you're trading at it right now. It did that earlier this morning out here. So you're pushing into a swing point with volume, even if you get rejected, says you'll be back up there. Now, today, if you close above 114.76, you're at 114.78 right now, says that more likely than not, you're going to see the IWM get up and test 115.98. If you can get above that, 117.65 becomes the number to take a look at. If we go take a look at the SPY out here, a SPY is not as strong as the Qs or the IWM. What I mean by that is the SPYs have not been able to make it back to their August 28th swing point. The IWM was August 31st, but in the SPYs, it's August 28th. And that low is 197.92. So the SPY is not really providing us with much information, is it? Wrong. I already shared with you that if you took a look at the VIX index, which is really based on the S&P 500 out there, if the VIX index is going to pull back, then the SPYs are going to at least get into that August 28th level. That level being 197.92, maybe up to 199.84 out here. That should be pretty decent resistance, and what we'll call decent resistance, 199.37. You get up above that, then you're looking at 202.35 to about 204 level out there. So we have the IWM, which we know was pushing into a swing point yesterday with volume. We have the Qs, which are trading inside that swing point, look like they want to get to 106, in a heartbeat. Now, that heartbeat might not be beating today, but Monday, Tuesday, most certainly. And we have the VIX index that if it does, in fact, continue to pull back, that'll go ahead and take these SPYs up to that swing point. So we got three of them that, in my opinion, for what it's worth to you, are suggesting the markets actually want to go ahead and move a tad higher. And from my perspective, sitting on a break-even position after holding it for 3 days, I didn't see any reason to take any heat inside of that trade. If we take a look at the Dow Diamonds, what are the Dow Diamonds? Well, we know that the Dow Diamonds, the Dow itself, it has been, it's a weak index out here. But with regard to its weakness, we also know that the price oscillator is back above zero. That says that the buyers are in control. And in this case here, the Dow Diamonds are not back up to the August 28th swing point, the low of which is 165.24, which had 8 million shares, and yesterday moved higher with 8 million shares. So it was pushing higher with some volume. Today, you've done, 3.8 million shares. Nothing that's really spectacular, but I expect that the Dow Diamonds will get up into that swing point from the 28th of August, maybe even get above it, maybe the top of it, which is a 166.62. So, as Gus from my big fat Greek wedding would say, there you go. So in essence, I've laid out some of the reasons to take a look at why the market may want to move higher. If we go back and take a look at what's going on currency-wise out here, we take a look at the euro, Japanese yen. This thing has been a little bit of a rocket ship out here. Guess what? Here's another reason that is fuel for the fire. If you take a look at this over the course of the last 4 days, nice green candles out here. Why do we pay attention to this currency pair? Because it's the one that tracks the stock market better than any other currency pair out there. If we take a look at, from the August 21st high inside of it down to the low here on September 4th, you can see you've made it above the 0.618 retracement level. And you're really coming into this with decent size bars. This says that this currency pair, the euro Japanese yen, wants to move higher. 137.56 is a 0.786 retracement level. This is actually kind of a V-shaped bottom, not kind of. For goodness sakes, it is a V-shaped bottom. We haven't seen a V-shaped bottom inside of the euro Japanese yen that has been this strong since when? It's been a long time. You can say maybe coming back to the April 2015 time frame out here. In any event, what does this say to you and I? This says to me that the euro-Japanese yen wants to get up and at least get back to its swing point high in the 139 level. Hey, if it can do that, that's plenty of fuel, that's plenty of liquidity inside the market for the markets to go ahead and push themselves higher. Again, I'm saying that the markets are going to make some type of, we're in choppy markets here for the next, what's today, September 11th, for the next 20 calendar days or so. But then we're going to see a big push to the downside. Then we're going to see a nice big push to the upside. We're in, let's not forget where we're at in 2015. Tightest range-bound type market, with the exception of a couple of trading days, right? And so this has been what we'll call a trader's paradise in being able to trade both sides of the trade out here. And I think that we're still in that through the end of September. So there you go. We've got plenty of reasons to at least take a look at the markets having the ability to move higher. Dow's up 28, S&P's down 77 cents, composites up a buck. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 12, S&P's off 2, Composites down 3 points right now. Let's go check in a lot of chatter inside the Tiger Den with regard to gold and silver. So let's go take a look at what has taken place thus far inside of that beautifully polished metal out here. Now we're taking a look at the gold chart. Top chart is gold priced in dollars. Bottom chart is gold priced in euros. Now, this is this is getting pretty interesting out here, because as I have suggested to you, that the chart of gold priced in euros is just as important, if not more important, than gold priced in dollars. Now, I'm just trying to pull this back here. Yeah, I think that's as far as I need to pull it back. If we take a look at what gold priced in euros has done thus far today, let's come right back to a rising channel line, trend line of support out here. That beginning back in 2014, January of 2014. So it's come all the way back to a level of support that, in my opinion, it needs to hold. So if you were looking for a buy entry into gold, well, this would be one of those messages, because you've come back to a support line. If, in fact, gold price in euros breaks below this level, it's trading at 972 right now, it's likely going to be 917 euros an ounce of gold out here. It'll fall down and probably test the swing points from back in November of 2014. Likewise, when we take a look at gold priced in dollars here, So here's your little nuance. If we take a look at its trend line, now it's not going back to 2014. The only rising trend line that you and I can take a look at is the one that began here on July 24th, 2015, which right now it's trading really right on the number, slightly below that number. But what gold also has done is it has tested the top of its swing point from July 24th. Inside the gold contract, that high was 1101.20. So we have, in essence, a test of a swing point. We're going to go take a look at the GLD. This is on lighter volume, and gold priced in euros coming back to a level of support out here. So it's really where gold has its back up against the wall. So there is no reason I would see why you couldn't take a trade in gold. And we're going to take a look at the miners out here with your stop on the other side. With these levels being broken, what you would see is gold go down to at least 1072, maybe lower out here. And we're going to go take a look and see if we can find any other intraday signals with regard to gold, because it's gotten down priced in dollars. It's been down as low as 1097.90. So that's the gold priced in dollars, gold priced in euros chart. Let's go take a look at the GLD. Let's get an idea as to what it is doing out here. Off 57 cents, 2.9 million shares have traded inside of the GLD. Ideally, what you would see today, so you don't have to jump on this at this moment here. It's not as if anything is taken up to the upside here. Or maybe you wait for one more trading day. There's nothing like waiting for one more trading day to get confirmation of something. If we take a look at gold, GLD, the ETF, the trading session is trading down into our swing point is July 24th. Volume there, 11.5 million shares. You've done 2.9 million shares today. We tested, or GLD tested this level back 2 trading sessions ago, September the 9th to be specific. Volume there was 8.8 million shares. You're going to do a lighter volume today than the last time that you tested the top of that swing point. That's how you like to see a swing point get tested. Now, of course, you like to be able to see some kind of sign of strength out here. Well, that's not going to take place, if it does take place, for days to come. So you have to make a determination whether or not the risk reward would be worth taking a trade here. But here's the, this is the message on gold. Your back is really right up against the wall. If gold and euros had not fallen down to that level of support, I wouldn't have as much potential conviction here. Now, the key is, the gold needs to reject its swing point. And you got to really take a look at the gold contract versus the GLD. I'm saying that the GLD needs to close above 105.59. It's 105.80. But it's not going to be a tick for tat type of thing. So you really want to make sure the gold contract rejects that swing point. I believe it was the July 24th level out there. Now let's go take a look at, now there's been a lot, I haven't looked at silver as in-depth out here, but let's go take a look at it for the moment. Trading down 14 cents at 14.50. Silver, let's see here. It's pulled back. The silver contract I'm showing with about 33,000 contracts. Let's go take a look at the SLV. Let's just go do that. Make that easier. That way you can do this at home as well with your work. So let's take a look at the SLV, the ETF for silver, see what it is doing. So its swing point that it's dealing with back here on August 26th. The high is 1358. The low so far this morning, 1364. Didn't get down there to test it, but that swing's got 12.3 million shares, only 3 million shares today. So in essence, a light volume pullback inside of silver. Real resistance inside silver is 1417. So those of you that are long or thinking of taking along, the SLB needs to clear 1417. Then you'll get 1490. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 2 points, S&P's off 4, Composite down 7, Russell 2000 off $1.50. We were taking a look at silver. We were looking at the SLV specifically, just to get a feel for what's going on as we take a look at the silver contract, the December contract here for silver. It's going to certainly need to get above that swing point from August 26th out there. That high is $14.74. We've got no reversal candles or anything along the lines out here inside of the silver contract. Back to SLV, though, what we were taking a look at was the volume dynamic out here. Now, you haven't seen a test inside SLV of the swing point from August 26th, but we're just using this as a volume characteristic. 12 million shares down there, and today you're back with about 3.5 million shares. What I mentioned before we go into that break is if we take a look at our daily TAS market profile box out here, the old support, which really should have been the 1417 level out here, as we take a look at that daily box, that is now become resistance. We can see that the SLV, the iShares SLV, has run into resistance up there on the trading day of September 2nd, September 3rd, September 8th, and basically yesterday. So that's a level that needs to be cleared to give you the all points clear bulletin. Now, also, where there's significant resistance, and that's at $14.90 out here. And we take a look at the TAS market profile. We got the point of control closer to the resistance level, the top of that box out there. That says it's really good resistance. Clearing that would be very positive news for silver. So that's what you're taking a look at there. Now let's go take a look at some of the mining equities, see if there's any clues out here. Let's take a look at Rand Gold. That's up 30 cents today on 780,000 shares thus far. Now, what Rand Gold is doing, it's trading into, now Rand Gold had a swing point back here from July 27. That swing point had 1.2 million shares, and price got into it with about the same volume, 1.196. So that's 1.2 million shares on September the 4th. Continued pushing lower with lighter volume. You are still trading below 57.06. You'd really like to see Rand Gold get back inside that range, which would be a close below 57.06. Volume today is lighter certainly than the 1.2 million shares out there. No reversal signal or anything along those lines inside Rand Gold. But just pay attention to that swing point level out there. Agnico Eagle off 8 cents, 2.1 million shares today. It is testing. It is not clear. It is not rejected its swing point. It's just testing the swing point. Let's see. Is it August 3rd? That low is 21.07. And you got 21 bucks. No, so it's $21. So here's the actual swing point. Give me a moment here. Let's draw the line where it needs to be drawn, because somebody's liable to do the work at home and say, well, Steve-O, why did you use that as a swing point? If we use the actual swing point, August 6th, 21 bucks even, Steven, is the low. You're trading at 21.75. The top of that is 22.44. So you're still trading with inside that swing point, which has 4 million shares, and today you've done 2 million shares. So you're inside that swing point with light volume. You don't have a rejection there in AEM. If we take a look at Barrick Gold, I don't know that we really want to take a look at it, but we will. That's trading below its swing point from the trading day of August the 5th, which had 18 million shares. You're down. You're moving lower with 14 million shares. Barrick Gold is just does not look good. Period. End of story there. So we won't spend any more time, but we can go take a look at Gold Corp. GG is the ticker symbol. Well, then we'll go take a look at the GDX, right? We'll take a look at what it's doing. But as we take a look at Gold Corp, this has a little bit of promise. The swing point that it's dealing with is July 24th, 21 million shares on that swing point. What it's doing so far today, it's tested with 7.9 million shares. Now, that's a test of a swing point with light volume. 1235 is the nut. 1235 is what it needs to close above. You're at 1241 as we speak right now. So it's going to be an end of the day signal inside of Gold Corp out here. Let's take a look at the GDX. Let's put that up on our screen for us as we take a look at GDX. And let's go look at a couple weekly charts, right? Since we're at the end of the week, let's not forget to go take a look at one level higher to see what the message is. In the case of the GDX, which is the entire basket, not the entire, but is a basket of mining equities out here. The August 26th swing point is what we're looking at. That has 97 million shares. How about that? You're testing it today with 27 million shares. Now the bottom of that is 1296. You're trading at 1287 right now. So you do not have a rejection of that swing point. But as I said, let's look at the weekly just to see what we've got. We have a short week. God, I hate short weeks. No, I love short weeks. But I hate short weeks with regard to trying to benchmark the volume, because you got to do, like 4/5 or something like that. Not that we can't do that, but it's so much easier if your numbers are even Steven. If we take a look at the GDX and just compare it to the week, that down week that began August 24th out here, that had 507 million. Hey, we don't even have to worry about doing math. You're at 151 right now, right? 151, divide that by 4, multiply that times 5. Guess what? We're not going to get up to 507 million. What you would like to see the GDX do today is close above 1296 out there. You're at 1287. Let's go back to Gold Corp, right? Because that looked pretty decent on the daily. So as we take a look at Gold Corp, how about this? So there you go. Light volume test on the daily, light volume test on the weekly, 85 million shares. It's a trading session that you and I are looking at. So I like this even better because we're not looking at that August 24th week. We're looking at the week that began July 20th as its session out here, which had 85 million shares. You're down with 33 million shares. Do the math on it. There's no way. You really, as long as it can close above 1235, you've got a rejection inside of Gold Corp on a weekly and a daily. Now, let's go take this back a little bit further. Let's take a look at Gold Corp on the monthly here and see what it's doing. As we take a look at it, boy, it's got the high volume monthly low from October 1st, 2008. Boy, is that not beautiful or what? Let's pull this off here. Now, the problem inside of Gold Corp is it's trading below that level. But boy, would you love to see this equity close above 1384 by when? The end of the month. So September 30th. You may not want to wait till that point in time in order to take the trade, but you're going to certainly test that level on lighter. Well, you should on lighter volume. How do I know what it's going to look like at the end of the month? I don't. But you're at 421 million shares. And the month of July was 237. The month of August was 238, and so forth. You're at 68. Double it, triple it. We're not anywhere near that volume. So if Gold Corp can, in fact, go ahead and close back above the monthly low of 1384, that could be a nice buy. Now, where would that? How would we know if Gold Corp has actually truly broke? Well, broken out. One, obviously, you'd want to sign a strength out there. Two, you'd like to see at least break a trend line. And the trend line inside Gold Corp, we can do trend lines. We can do. We can go ahead and do channel lines out here. But in essence, I would say that is your trend line out here. Draw that at home on your chart, on your monthly chart out there. And if Gold Corp can get above that, then you absolutely have a change in trend. You at least have a move that ought to take you back to the top of that monthly swing point from October 1st, which is at 33.85. Or if we just take a look at retracement levels and values, that says 29.04 would be its first move out here. So that's in the case of Gold Corp. What else did we look at? What else might have been okay out there? I don't remember. Was it AEM? What did we see? We didn't have a rejection of a swing point inside AEM. But let's go see what it is doing. Oh, this is pretty darn nice. Well, this is actually very nice. Now let's take a look at. Let me get rid of this right here. Come on, work with me. Okay, so in the case of AEM, it has made its way all the way back to that high volume bar from October of 2008. And that bottom, or that low, is $20.87. Now, the volume there, 132 million shares. Was it 132 million? 130? Yeah, 132 million shares. 2087. Did you test it last month? 21 bucks. You missed it by 13 pennies. How dare you? How about that? If we take a look at the low this month, 21.22, still hasn't tested it. What a rotten shame out there. But look, volume last month, which was including obviously the August sell-off, 83 million shares going against a total of what? 132 million shares. So like AEM may not be at the bottom just yet, but it looks to me like it's getting really, really, really darn close out there. Now, same thing. In the case of Agnico Eagle, I would just simply take a simple trend line, which you could do from the December 2010 time frame, and it really doesn't have that much further to go in order to really break above that trend. I just go ahead and make it right about there. So Agnico Eagle, that's pulling back into a. Let's go take a look at Randgold just to finish this off here. Just to see what we're looking at. Now, in the case of Randgold, we're not dealing with October of 2008 out here. We're not anywhere near October of 2008 inside of it. So you'd say that Randgold is actually stronger. If we take a look at the benchmark, what Randgold, its high volume out here, it takes you back into September of 2009. It's not so much that that's a swing point, but it is the highest volume bar when we take a look at our monthly chart for Randgold. So that, in essence, is where I would go ahead and draw my line so we could take a look at similar tests out here. I should have deleted that. Hold on a second here. Let me go back and get rid of that daily number. So when we look here at, we're going to use the September. So what is it? September of 2009 candle session, which has volume of 40 million shares. That's 5678, and we've tested 5706, 5785. We've tested it this month. So this month here, you're at 6.5 million shares. Double it, triple it if you want. That would give you to 18 million shares. There's no way you're going to get to 40 million shares. You haven't necessarily rejected 56.78. I mean, you're trading at, hold on a minute. What are we trading at? Yeah, 56.78. You're trading at 56.97. You know, this is a monthly chart, but it's looking pretty good. So it's very possible that what we're looking at here is, is a bottom inside of these mining equities out here. And it's nice to see the GLD and SLV pulling back with some light volume. And it's nice to see gold itself priced in euros coming back to a level of support out there. So as Gus would say, there you go in picking apart the mining sector inside of the market. I know you want to take a look at some other things as well, so let's go do that. What else do we want to take a look at that is of interest out here? We look at the currency pair, the euro versus the Japanese yen. That's moving higher, so don't get too carried away with the fact that things are a little bit red inside the markets here. I believe that they want to move higher. I've already laid that out for you. Let's take a look at some of these individuals. Well, let's go take a look at Apple. Right, because if we take a look at the Qs out there, which we did earlier, let's go see what Apple's doing. Now, this is the monthly chart here for Apple. We're not interested in the monthly chart for Apple. Let's just go look at the daily time frame out here. And in the case of Apple, it's trading inside its most recent swing point, which was August 31st, 56 million shares out there. You moved into it yesterday with, oh, son of a gun, with volume, 62 million shares. I think you and I covered that. I think we covered that. Yesterday, we were taking a look at Apple, saying, guess what? It was pushing into its swing point with volume, closed inside it. What Apple needs to do now is test the 114.53 level. Chances are it's going to go ahead and break above that, and it's going to make a run for the 117.65 area, and that's its TAS market profile high. So you're in it today, 27 million shares, a little bit lighter volume, much lighter volume than what you had yesterday. Still doesn't matter. You were pushing it yesterday with volume. If we look at a weekly chart out here for Apple, let's go see what we've got out here. What's the weekly tell us? And the weekly doesn't tell us a whole heck of a lot. What the weekly says is it really needs to clear the downdraft from August 24th from the high of that bar, which is 113.31. So if Apple can close above 113.31 today, you'll have a failure of that high volume weekly swing point inside of Apple on price and volume. And that says price should move up to about the 117. Again, that's still the daily box, 117.65 out there. That's so they can look at the weekly chart for Apple. Let's look at some stocks here that are getting crushed. Let's go take a look at Mattress Firm, down about 21%, down $13, and volume like you can't believe that has come out of this thing. Now, this has pulled back into a breakout area, and you can see that Mattress Firm had broken out on the trading day of August 11, 2014. Unfortunately, the volume on that breakout session was 1.06 million, and today you've done 2.7 million shares. So it's come back to a breakout area, which ordinarily would be a nice buy, but it's done it with heavy volume out here. As far as where is it likely headed to, let's put a weekly time frame chart out here, see if there's any volume candles that stick out like a sore thumb for both you and I. By the way, the weekly volume as well was 2.3 million. You're already at 3.8 million, so you're pulling into a breakout area. If it can hold this level, then, best case, maybe it's setting up some type of consolidation. But if it breaks through here, what you ought to see, and what it really ought to do anyways, is go down and test the May 12th area, which is right at about the 41.97 level. Dow's up 5, S&P's back 3, Composites down 4, price oscillators still all above 0. Steve Rhodes, TFNN, there you go. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Price of the market. Market itself relatively flat. Dow's up 10. S&P's off 2. Composites down 3. Let's take a look at a couple equities here that are moving to the upside. How about Restoration Hardware? RH. Take a look at volume coming into this equity. Now, when we pull this back, I believe this came back to a breakout area as well. Let me get rid of. It did it for me. Yeah. So in the case of Restoration Hardware. This actually had broken out, right? We took a look at a stock that had broken down into a brake mattress firm, had broken down into a breakout area, with heavy volume. In the case of Restoration Hardware, the breakout session was December 11, 2014. Volume there was 6.1 million shares. And the breakout area basically becomes the day when you have that gap. Now, gaps are your friends out here, right? It's like, because here's the thing, and I definitely consider myself to be a candlestick aficionado, a gap aficionado out here. And here's something that's, Stevie subtle, if you will, and that is people may take maybe kind of a bearish approach to a big gap breakout out there, versus if they had seen this totally filled in, okay, if the entire candle was filled in, which in essence is really what a gap is, people would say, oh, man, that's really a nice breakout. Now, in either case, what you want to do is you want to wait for price to come back to the breakout area, right? Well, and just like we were taking a look at volume and looking at many of those gold equities and testing swing points, it's now the thing with a gap to the upside out here is you don't know, is it the top of the gap, meaning the day before where it broke out to the upside, which would be December 10th high? Is it the low of that session, or is it really a swing point that's slightly further back out there? It's any one of those areas, by the way. What you're looking for is a range for those of you that are looking to get into an equity. Now, people that were looking to get into Restoration Hardware, on the trading day right here of February 25th, this equity pulled back with 593,000 shares versus the breakout of 6.1 million shares. That's a beautiful thing. And then you had a nice little bullish engulfing session the very next day, which was also another test on light volume of 693,000 shares out here. It pulled back on August 24th, by the way. Sorry about that. It pulled back on that August 24th session with light volume. The volume on that was 1.5 million shares. So it was also coming back into that breakout area with light volume, 1.5 versus 6.1. So today it's taken off to the upside. It's above its market profile resistance level. Restoration Hardware ought to be able to make a run to the upside, which would be the July 23rd area, somewhere between 104.37 and 105.98. This is what you like. This is being able to buy a breakout, you having the gap become your friend out there, and that's what you want to become a master of. Or just flip it around to the other side, where you've got a stock that breaks down with hard volume, gets back to the breakout area, and then go ahead and move lower as well. So that's Restoration Hardware. Shake Shack, let's go take a look at Shake Shack, up 11% out here. What has a Shake Shack done here recently? This is the daily chart. Shake Shack getting back to its IPO price level, or actually the low, which was formed not all the way down to the bottom, but down to the February 17th area. That was the swing low. It came back into that area on August the 24th. The volume there was 1.4 million shares. You're up today with 1.1 million shares. So in the case of Shake Shack, let me turn off these. I can't turn them off right now. Here's your resistance level, right? The exact opposite. So Shake Shack becomes a potential short somewhere in the vicinity of 60.50, 62.20, or 67.50. It all depends on the volume characteristic as prices move into the area where it had broken down from. So, folks, stay tuned. Our man David White, that lovable, squeezably soft Charmin guy, he's going to be up next. Have a terrific weekend. I look forward to seeing you on Monday. There you go. Take care, folks.
The TFNN End of Summer Tiger Dollar Sale is here. We've just announced our best Tiger Dollar Sale is back for 5 days only. This week, you can get up to a 40% bonus on whatever you spend when you purchase Tiger Dollars. Tiger Dollars are the best way to lock in added value and extra savings for any of your TFNN products or services. Normally, we only offer a 10, 15, or 20% bonus, but for this week only, we've doubled all our bonuses and are giving away 20, 30, and even 40% bonuses on all Tiger Dollar purchases. Tiger Dollars can be used for any TFNN product or service and never expire. So whether you're a subscriber already or planning on trying out a product soon, now is a perfect time to get your Tiger Dollars. For more information and to purchase your Tiger Dollars today, visit the front page of TFNN.com for all the details. Remember, this sale ends Sunday, so act now and don't miss out.
You're watching Tiger TV.